Okay. So in this chapter, we cover, you also had questions. So you had a question about your Shoebox software. Can I take a look at that at the end?
Yeah.
Okay. All right, so in this chapter, you're gonna be using these tables at the back of your book in the appendix. So you might wanna bookmark it, put a sticky note or something there, because you're gonna be flipping back and forth to it. I will try to make some copies of these for those of you who do not have a paper copy, because I think it's probably a lot easier to use when you've got a paper copy there. But today, we are gonna kind of do an intro to this chapter. Let me get this up. Oops. All right, chapter 6.
What part of the appendix is it gonna be?
So it's at the end of the chapter.
Oh,
Yeah, I know. They've got appendices at the end of the book.
that's why
and then they've got
I was
appendices
looking,
at
I
the
couldn't
end.
find it in the back.
Yeah, so that's why, yeah. So, I've got some sticky notes up here too, so if you've got the paper copy and you wanna put like a sticky note or something, feel free. This is our chapter on business, sole proprietorships. So, it's just one particular type of business that we're looking at here. Happens to be the most common type of business in the country, but these are also, the smallest businesses. These are businesses that are only owned by one person, called sole proprietorships, and they choose to be taxed as a sole proprietorship. So there are some choices that individuals have when they form a business as to what kind of business they want to form. This is probably the simplest business to form, but it also might be one of the more expensive businesses with regard to taxes. But it is the most common type of business structure in the US. It does not require a separate tax return. Other types of business structures, so we've got what we're doing here in this chapter, so sole proprietorship. Sole proprietorships are reported on the individual tax form, the 1040. There's no separate tax form for it, okay, which makes it pretty easy. You only have one tax return to prepare. But like I said, there's some tax implications of having this easier form of business structure. Other types of business structures, partnerships, S Corp, C Corp, and we've also got nonprofit. So these are business structures. Partnership has its own tax return. It's called Form 1065. In chapter 14, we take an initial look at partnerships. Now, there are entire college courses devoted to teaching about partnership taxation. Partnership taxation can be pretty complicated. What we're going to do is just kind of an overview of what's involved with those partnership returns. But in this chapter, we're not talking about partnerships. S corporations. S corporations, I should have put C corporations up here first. In fact, that's what I'm going to do. Let's switch these out. C corporations are another form of entity that has its own tax return. It's called the Form 1120. C corporations, we're going to look at in chapter 15. It's a type of corporation the corporation is formed under state laws. So depending upon what state you're in, will determine how you form that corporation. There are a lot of stringent requirements with regard to corporation. We think of C corporations as like those bigger companies, although it doesn't have to be a large company. But those larger companies where there are shareholders, okay? So C corporations have shareholders. And like I said, we're going to talk about it more in chapter 15. Again, their entire course is devoted to C corporations. S corporations, again, it's a type of corporation. S corporations are kind of a hybrid, though, between partnerships and C corporations. There are shareholders in S corporations, but there are lots of restrictions on who can be a shareholder. A lot of S corporations are like mom and pop type organization or companies. Okay, they tend to be smaller, although they don't have to be smaller, but there are restrictions on the number of shareholders that there could be, as well as the type of shareholder. So this is also covered very briefly in chapter 15, so the very last chapter that we talk about. Nonprofit organizations, these are also corporations formed under state laws as corporations. They have their own tax form called a Form 940. They also have a 940 EZ. I think they still have that. These are corporations that are formed for some charitable purpose. We looked at when we talked about charitable donations in chapter 5. These are the types of organizations that we would be donating to. So they don't have shareholders. Their purpose is to generate revenue for some sort of charitable purpose. We don't do anything with 990s. Okay, the ones that we're looking at here, chapter 6. Sole proprietorships are part of the Form 1040. That means they have their own schedule. So we're going to talk about another schedule. So we already talked about Schedule A, which was for itemized deductions. We talked about Schedule B, which we use when we have interest and dividends exceeding a certain dollar threshold, or we have exempt interest, that sort of thing. But that Schedule B was for interest and dividends. Now we're moving on to the Schedule C. Okay. There are no shareholders with a sole proprietorship. Sole proprietorships are owned by one person. Husband and wife together cannot own a sole proprietorship. Only one person. So even a married couple don't count as one person, even though they may be filing jointly on the same return. It's one individual that owns the company. Okay. If it's more than one individual, then it would automatically be a partnership. Partnership essentially is a sole proprietorship that's owned by more than one person. And a lot of the tax laws that govern partnerships they get their complexity from trying to make sole proprietorships, all the rules for sole proprietorships fit more than one person at a time. So, and you'll see that when we get into the partnership chapter. But what we're talking about here, sole proprietorships owned by one person. What we're going to do, so we're going to look at income and expenses related to sole proprietorships. What constitutes income? What constitutes expenses? Within that expense category, we're going to talk about this concept of ordinary and necessary business expenses. Now, we already touched on that. I'm trying to think of what topic it was where we touched on ordinary and necessary. Does anybody recall where that was?
a little bit in the itemized deductions for like that medical.
Okay, yeah, we talked about that, yeah, there was an area, there was some other area too, anyway, we'll cover it again, the ordinary and necessary, we've gotta define what that is, because only ordinary and necessary educator expenses, that was it. Only ordinary and necessary expenses are allowed as deductible expenses for purposes of the sole proprietorship expenses. Then, the big daddy, this is the one I think the authors really could stand to put in its own chapter. Depreciation, okay? Now, when you took financial accounting, you learned about depreciation. You learned about probably straight line depreciation. You may have learned about some of the year's digits depreciation, maybe not. I don't know what they teach in Print 1 and Print 2. I know intermediate accounting, we would cover some more advanced depreciation concepts. You talked about probably accelerated depreciation, maybe like declining balance type depreciation, where you take more depreciation up front and less as you go. But you had a lot of leeway with regard, in financial accounting, you had a lot of leeway with regard to depreciation. You could choose what depreciation method, you could even make one up if it made sense and you were consistent in applying it. You could choose how long that asset was going to last you, right? Okay, we think this piece of equipment is gonna last us 10 years. Maybe another piece of equipment, well, we think it's gonna last 15 years. But you have a lot of leeway with financial accounting. In tax, you do not. In tax, there are specific rules that have to be followed based upon the type of asset that you are purchasing, based upon when in the year you are purchasing it, based on how much you paid for it relative to how much you paid for all of your assets during the year. There are very strict rules with regard to how you depreciate assets in tax. So all that stuff you learned about financial accounting, set it aside. I'm gonna blow your mind with the differences of the depreciation methods for tax as opposed to for financial accounting. Then, once we get over that, and this is where I wanna get through, like maybe halfway through depreciation today. And then we're gonna talk about travel. I don't know why they include entertainment expenses. Entertainment expenses aren't deductible anymore. They used to be deductible. They still include it here. Travel, it should be like travel and transportation expenses for businesses and the rules regarding that. There is a difference between travel and transportation. That's, we talked about it for medical expenses. You know, travel is overnight, transportation is local. So we're gonna talk about that. Home residence, I'm trying to think of the terminology. So deducting the business portion of a home, right? If you use your home for your business, a lot of people do, especially in this day and age, after post-COVID, a lot of people are still working from home. Now again, we're only talking about individuals who own their own businesses here. We're not talking about individuals who are employees and work from home. This is only for those who own their own business. But there are ways that those individuals can deduct expenses that would normally be personal, non-deductible expenses as business expenses if they use a portion of their home for their work. Now, very strict rules and record-keeping requirements for those, but as long as they're followed, that can be used. So we're going to look at what those requirements are. Hobby loss rules. Why would we include hobbies in here? Well, a lot of times there's kind of a very narrow line between what is a business and what is a hobby, right? A hobby being, think about, I like to make pies. Everybody loves my pies. I don't really, I've never made a pie. But everybody loves my pies, and they keep telling me, you should make more pies, you should sell these pies. For right now, I'm just, you know, I'm making pies and I'm giving them to people. Sometimes I sell them for a little bit, You know, it's more of a hobby. I just enjoy making pies, and I enjoy making other people happy with pies. But I've started to think, you know, maybe I really could make some money off of making pies. So I start going down to the farmer's market and selling my pies there. And then I start marketing my pies. I get a Facebook page, I get an Instagram page, I'm taking pictures, I'm putting it out there, I put together a website, I'm now taking orders for my pies. It's become almost like a full-time job for me. Well, now my hobby of making pies has transformed into a business. My purpose now is no longer just enjoyment of making pies and making people happy. Now I want to make a profit, okay? So there is sometimes a really thin line though between those two things, right? Is it a business or is it actually a hobby? So we're going to look at what the hobby rules are. They're much more strict than the business rules. Education expenses as well. Here we're not talking about training for a different career, right? We're talking about improving or maintaining your skills in your current career, okay? And the costs of doing that oftentimes are deductible for individuals who have their own business. And then we're also going to talk about self-employment taxes. So for those of you who've taken payroll or are currently taking payroll, that will be kind of a refresher on that. So any questions on what we're going to cover here? Okay, so that's our intro. I just